WealthVP serves both companies and investors. The firm helps companies improve their pitch for a greater likelihood of success, and it helps investors set up the right parameters so they are alerted to deals in their area of interest. With me today is Lee Hartwig, who is the CEO of WealthVP. So great to have you here.
Great being here. Thank you.
So tell me about your experience, and then how did it come about for you to be the founder of WealthVP?
I've spent most of my life helping companies grow and investors make good decisions. And what I found a couple of years ago as I was helping a few startups raise money is that it was really hard to do. And we found that 90% of those will go out of business for lack of capital. I also saw on the other side that we had investors that really weren't connected to these private companies and didn't have what we call deal flow to be able to see good ones. And consequently, they end up making poor decisions with investments that maybe they shouldn't have gotten into in the first place. So I did a little research, and I found that there's three kind of places in the marketplace. Of course, there's the public markets that have been well digitized. And then everyone's heard of crowdfunding, which you can get online and invest $1,000 in pretty much anything. But there was this huge middle market that's multi-trillions of dollars a year that is all word of mouth and networking. So I said, I think there's an opportunity here not only to help these companies grow, but also to help investors. And so we set out to digitize that with WealthVP. And one of my larger investors said, I get it. It's kind of like Match.com meets Shark Tank. And I said, yeah. I think
I think it is. Yeah. Well, what's so interesting is how difficult it is for startup companies to raise money. Like, you hear of these stories, Facebook and Apple, and you think, oh, there's just all this money out there. It's very, very hard to raise money. And I know a lot of startup companies just, spend all their time pitching and sometimes never get investments. So you're really trying to help them as well as the investors looking for those opportunities.
Absolutely. Founders of private companies can be brilliant, but one area that they're not brilliant in most of the time is raising money and pitching. They're just not very good at it. And they think that their idea is going to attract all these investors, but it's really hard to make that happen. So what we do is we expand their networks from their friends and family and other people they know. And because we're worldwide, we're global with our investors, we can expose them outside of their geographical area as well.
And then you've got something called the concierge service. So is that what you're talking about there, or how does that work exactly?
Actually, it's two things. Let me talk about the concierge service second, but we've developed a software that's a matching software. So if an investor is looking for something in fintech or crypto or let's say EV, electric vehicles, then they can go online and they can match on the software and find exactly what they're looking for, which is phenomenal. And we're matching really two marketplaces. And on the investor side, we not only have the matching feature, but they told us we would love to meet each other. So we designed a whole community around this concept, kind of like I like to think of it as LinkedIn on steroids, but specifically for family offices and high net worth individuals.
Yeah.
What we found, though, is they wanted more than the software. So here's the concierge services that you were talking about. That is something that through our testing, through our due diligence process, we found that high net worth individuals and family offices wanted that personal service. And they wanted that to help them to, if they weren't on the platform, to get a call and say, hey, we've got a company that we think you might be really interested in. And by the way, would you like to join this sub-community of angel investors that are in that same vertical? And so the concierge will help with that. But not only that, but we also found that these family offices, do you know that 80% of them lose all their money between the second and third generation?
I'm honestly not surprised, because it's just, it loses that over time, but interesting.
So what we do is we can connect them with experts in estate planning, with educational services, and many more things than just the matching with companies. Mm-hmm. So it's truly a concierge service of very high-end concierge that perhaps one of our concierges is an estate planning attorney. He's ran a multifamily office. So these aren't just normal service people. They're people that are, very high-end experts in this area of expertise.
So walk me through the process. Say that I've got a great idea for a company, or, maybe I've got a little bit of friends and family money. And then I come to you, and then what happens?
That is a great question, because this is exactly the appetite for these companies to raise money is voracious right now, especially in this high inflationary environment where investors might be backing off a bit. And so, did you know there were 5 million new startups last year?
I'm sure COVID probably has something to do with that too, right? People want, maybe the pandemic, like people don't want to start their.
It did. It absolutely did. And so most of those are 1 and 2 people companies, but let's say 5 or 10% of them. So still hundreds of thousands of companies want to grow and become a unicorn and do all these wonderful things to grow the company. So they'll come to us and we'll say, you have to qualify to be on our platform, because if they're not far enough down the road where they're in revenues raising, at least $1 million and have very seasoned management that have already had exits or came from the industry, they really aren't ready for our platform. And our investors have told us we want quality deals. So we will encourage those companies that didn't make the cut to get to certain levels, but we're kind of Darwinian in that way, in that the companies have to get to a certain point to be able to be an investable company in this middle market. So once they qualify for that, then we have people that will help them onboard. We actually review their presentation decks, because most of them aren't very good, and that is our product. So we wanted to make sure that that's pristine. And they'll all be enrolled in a pitch event, and we'll show them how to use the software and be trained in that. And then, because we only charge a service fee, we don't take any back end of any deals, we don't take any commissions, that we want to help them get funded, whether it's on our platform or not. So many times they'll use our suggestions and advice and pitch decks. We had someone that called us just last week and said, hey, I raised an additional $1 million outside the platform because of your help.
Interesting. And then what trends are you seeing? I mean, you mentioned inflation maybe causing some more cautiousness. Are there any other trends that you're seeing in the kind of capital raise environment right now?
There's trends, and there's also misnomers out there. Most startups feel that venture capital companies fund most of the startups. Do you know they only fund 1% of startups?
Interesting.
Only 1%. So the rest is done by these high net worth individuals and family offices. So if they do go to venture capital in this period of time, we found that they're still investing, but they've really slowed down quite a bit. And they've also knocked down their valuations. Investors that are private investors, we find that they want 2 things out of an investment that perhaps don't align with venture funds. Number one, they would like to have a high rate of return. But number 2, they really want to help companies grow. They have more of an altruistic function of saying, we like to leave the world in a better place. And, perhaps they want to invest in impact investment like women-founded, veterans, minorities, or environmental ESG type companies. And so the trend now is that these family offices want to go direct. They want to eliminate the high cost of the venture firm, who usually takes 20% of the back end of the deal and 2% per year in fees. You can imagine over 10 years, that's 40%, I call it a haircut that they take. So not that we don't believe in venture funds, we think that they do a good job, but there is a marketplace now that families are trending to go direct. And so we satisfy that kind of appetite.
Oh, that's really interesting. And then talk to me a little bit about your business model, because you mentioned earlier you want everybody to get funded, but it's kind of a subscription-based model, right? How does that work?
It absolutely is. I think because this middle marketplace has grown so big, and it's been reported in the Wall Street Journal, it's over $2.5 trillion a year of money coming in. And so there's a number of companies that will help companies grow and take a back end of their deal. There's other companies that do conferences that you have to pay to go to, a lot of money to go to conferences. And what we found is that companies really appreciate that we're in the matching business. So we ask for a fee from the companies as well as from the investors. And for that, they get these incredibly valuable services, including for companies. Of course, they get pitch deck review, they get to match on the software, they get a pitch presentation, and they get advice from our concierge.
Yeah.
That alone would cost, easily over $10,000 or more, especially if you look at conferences can be that. So we give them great value for that, but we don't take a backside of their deal, and they love it because giving up a portion of their company is very difficult for them. On the investor side, investors tended to make money outside financial services. So what we found is they really need help and advice and guidance into great deals that perhaps have lower risk and still the higher return that's there. And if they were to do it themselves, imagine if you had to hire a secretary and someone to find deals, and you had to find a CPA. And so a lot of work that you'd have to put in, and maybe $250,000 just to build that kind of thing up. And we can do it for a fraction of that price and deliver it better, faster, less expensive. So we think the subscription model will do really fine with our financial model, and our goal is to build our company into $1 billion company over the next 4 or 5 years. We think we can do that on the subscription model, and we're not greedy. We don't need to share in the back end of deals.
Yeah. Well, and you vetted the companies as well. Like, they have to meet certain criteria. So it's not like the investors are being introduced to just any company. I mean, they're companies with real businesses and real potential.
Absolutely. We went from the idea of maybe having 1 million companies on the platform because we thought that marketplace is out there, but we found that the only company that would make money was ours, because most of them wouldn't get funded. So we decided that we wanted quality companies that had great potential, and we wanted to match them with quality investors that would make it easier for them to grow and to build something meaningful.
Yeah. Well, Leif, thank you so much for joining and explaining WealthVP, and fascinating concept. And I love to support startup companies. I think there's so much great innovation going on out there right now.
You.
So yeah.
I'm humbled by you interviewing me, and this is just a wonderful opportunity. Thank you so much, Jane.
Thank you so much. And I look forward to updates in the future.